Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now just a general disclaimer, this video is only for education purpose. Please consult your financial advisor before investing and trading. Now let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the momentum of the market is getting stronger and stronger. In last 9 trading sessions, Nifty has rallied very sharply from the lows of 21,800 and almost tested the highs of almost 22,700 to 22,800 odd marks. And we had viewed that the market are bullish, but in a very short span of time, the rally was a 90-degree one, and we might see some sort of selling pressure at higher levels. So we had expected some sort of profit booking coming in from the levels of maybe 22,700 to 22,750, and we had a view that wait for some pullback, let the market get stable, and then try to create long positions. So market opened on a positive note or a flat note and started correcting, and it ended on a negative note, and it saw some sort of profit booking from the higher levels and almost perfectly performed on our expected lines. So now looking at the Friday's close, let us go to the Nifty charts. We'll try to figure out what could be the trend for the next week. So let us go to the Nifty daily charts. Now this is the Nifty daily charts, and before discussing on the technical charts, next week is a very big event, the result of the general elections. Prior to that, in the last week, we have seen that Nifty had seen a very sharp correction from the levels of almost 23,110 odd marks till the levels of 22,476 in a very short span of time, and which we have been expecting this kind of profit booking from the higher levels. Now on the Friday trading candle, you can clearly see it has formed an inside day candle. It is the candle, the combination of the candle of Thursdays and Fridays is considered as a harami pattern, and formation of this pattern after the correction is considered to be highly bullish and very effective one to give a upward a push to the market from these particular levels. RSI, you can clearly see it is still negative, but the this particular candle, the harami pattern seems to be quite positive from this juncture. So we might see a sharp rally in the sense of a technical pullback from the current levels. So as I said, next week is a very big event. General election results are on 4th of June. So definitely we might see high volatility from these levels. But purely looking at the technical pattern, it is oversold on the hourly charts. So we might see a sharp short covering bars from these levels. So one needs to avoid short going at from these levels. So most probably the setup is oversold on the hourly charts. We might see a sharp pullback from these levels. So the view is buy at current levels, and if there is a dip, one should buy on corrections also. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed around 22,417. Below that, the second support is placed around 22,297, and third support is placed around 22,054. Whereas on the upside, the first resistance is around 22,825. Second resistance is around 23,110, and third resistance is around 23,300. These are the crucial supports and resistance level in Nifty for the next week. Traders should just try to follow these levels, buy on supports, and try to book profits on the resistance. This should be the strategy, or else one should follow 30 minutes to 45 minutes range breakout strategy. One should mark highs and lows of 30 or 45 minutes, whichever is comfortable to the individual traders. If it breaks highs, go long. If it breaks low, go short. But looking at the current setup, I would suggest avoid going short. just try to look out for the long trades from these junctures. So definitely, the setup seems to be quite oversold, and we might see a sharp short covering rally from this juncture. Now, friends, let us discuss the derivative data of Nifty calls. In Nifty calls, the action was seen in 22,800 calls, then 23,000 calls, then 23,400 calls also. In between, there were volumes such kind of 23,300 also, and 22 or 23,200 calls also. So definitely, the setup seems to be quite neutral. There is no negativity in this particular data. Immediate resistance would be around 22,800 mark. If Nifty closes about 22,800 mark, then there are chances that Nifty might rally towards 23,000, which is all-time high, 23,100, which is all-time high. And if it closes above those levels, then there are chances that Nifty might test the level of 23,400 in the coming trading sessions. There has been a rise in the volumes, rise in the open interest. Implied volatility is between, uh, you can clearly see it is between 36 and 37.57. Now, the rise in the implied volatility, this is in the danger zone. So we might see volatility coming into the markets in the next week. So one needs to trade with strict stop losses because we might see high swings, at least specifically till Thursday. Now, friends, let us discuss the derivative data of Nifty puts. In Nifty puts, the action was seen in 22,200 puts, then 22,000 puts, and 21,800 puts. Again, there was some concentration near 22,400 puts also. So the the implied volatility is between 38.19 and 41.15. There has been a rise in the volumes, rise in the open interest. The option premiums are flat. So definitely, looking at implied volatility, we feel that smart money might start writing this particular puts. So if there is a writing of the puts, which might push the markets on the upside, so one needs to be highly cautious. One should avoid going short. If Nifty, until and unless Nifty closes below 22,200, this could act as a very strong support area. And if it closes below those levels, then there are chances that Nifty might drift down to the levels of 22,000 and 21,800 odd marks. So overall, looking at the charts and derivative data, both seems to be positive at this juncture. The implied volatility of puts are very high, so smart money might come in and start writing puts, which might push the markets on the upside. So definitely, one should avoid going short at these levels, or one should wait for market to give an impulsive wave and then start building long positions for a upside swing. So definitely, chart seems to be positive. Any dips should be used as a buying opportunity. This should be the strategy for the next week. Now, friends, let us discuss the Bank Nifty daily charts. So let us go to the Bank Nifty daily charts and we'll try to figure out what is the pattern which has been formed. Now, compared to Nifty, you can clearly see the Nifty was stronger than Nifty. You can clearly see Bank Nifty didn't correct as much as the Nifty. So already the momentum is positive. You can clearly see the setup is way poised to break this congestion breakout of the last three trading sessions. Bank Nifty has potential to test the levels of 50,000, and if it breaks 50,000 and closes above those levels, then it might test the level of 51,000 also in the coming trading sessions. Here you can see RSI is also positive. It has given a comfortable crossover, positive crossover from the comfortable zone. So definitely the chart seems to be positive. Nothing to worry about it at these levels. So looking at the charts, the trend remains to be positive. Any dips should be used as a buying opportunity, or one should be long on the Bank Nifty from this juncture, or even if there is some sort of cool off, that should be used as a buying opportunity. So friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is around 48,569. Below that, the second support is placed around 47,873, and third support is placed around 47,400. Whereas on the upside, the first resistance is around 49,688. Above that, the second resistance is around 50,000, which is the psychological mark. And if it breaks, then third resistance is around 50,500 odd mark. So these are the crucial supports and resistance level in Bank Nifty for the next week. Traders should watch out these levels closely. Buy on supports, and the strategy should be sell on resistance. This should be the strategy. And again, I would like to say next week is going to be highly volatile, so one should trade with strict stop losses. So, friends, now let us discuss the derivative data of Bank Nifty calls. Now, in Bank Nifty calls, you can clearly see the action was seen in 49,500 calls, then 50,000 calls, 50,500 calls, and 51,000 calls also. Now, here you can see the option premium are positive. The implied volatility is very high. It is between 40 and 43.67. So this kind of high implied volatility uh, is never seen in the recent past. So one needs to be cautious in the markets. Definitely, we might see uh, a sharp short covering rally from this level if Bank Nifty crosses 49,500 from these levels, and there are chances that it might blow out from those particular level. If it breaks 49,500, then next resistance would be 50,000 and 50,500 to 51,000 in the coming trading sessions, maybe next 8 to 10 trading sessions, or at least till expiry. Now, friends, let us discuss the Bank Nifty put data. In Bank Nifty puts, you will clearly see on the screen the action was seen in 48,000 puts, 48,500 puts, sorry, then 48,000 puts, 47,000 puts, and 47,500 puts. Now there has been a rise in the volumes in certain strike prices. Example 48,300. Slightly shedding is also seen. Implied volatility is high. It is between 41.3 to 48, almost 48 and 49. So definitely this is a danger sign in Bank Nifty puts. There has been a drop in the option premium that is clearly indicating that smart money is already into writing the puts. Writing the puts and highest implied volatility in the recent times is clearly indicating that the writers will get aggressive in Bank Nifty puts or writing Bank Nifty puts, which will push the market very strongly on the push the Bank Nifty on the upside very strongly in the coming trading sessions. So one should avoid going short in Bank Nifty. If there is a correction, that should be used as a buying opportunity. But looking at this data, one should avoid going short. So, friends, overall, looking at the data of charts and derivative data of Nifty and Bank Nifty, the strategy should be buy on dips. Trader should be on the long side. Use any dips as a buying opportunity for a positional trade, at least for the next week or till Thursday. And again, I would like to say next week is going to be highly volatile. Wild swings might be the part of the trading sessions because of the election results. Aggressive traders should trade with strict stop losses, or defensive traders should avoid trading in the markets. We might see a wild swing coming into the markets at least until Tuesday. So, friends, now let us come to the final segment of our show, which is positional call. I've identified one stock. Name of the stock is Coal India. Let us go to the daily charts of Coal India, and we'll try to figure out what is the trend of the stock and what a kind of move it can give in the coming months. You can clearly see the stock has given a rounding bottom breakout, then it has given a pullback. Again, it has tried to give an upside rally from this junction. So definitely the charts seems to be very positive. You can see the short-term moving average is also positive. RSI has given slightly positive crossover from the comfortable zone at the 60 mark, which is very strong sign at this juncture. Currently, the stock is quoting around 491. So, swing traders, short term investors, positional traders, long term investors can uh, buy or accumulate the stock in the range of 491 or 488 and on dips to 443 for an upside target of 540 in short to medium term. Short to medium term means investment horizon of next 2 to 3 months. So again, I would like to say the stock is looking very positive. The pattern is also very strong. The price volume actions are also matching that the stock can give a decent rally from these levels. So one should Coal India should be on investment radar for investors. So thank you very much, friends. Let us conclude the show. Any suggestion you can give in the comment box. And have a nice trading week. Thank you.